The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 20th day of July. My pleasure to be here, Monday through Friday this time. 877-927-6648 is the number to call. You can see here the E-mini is up $1.50 at 28.06. Made a peak C at 28.18 3 days ago. Look at the weekly chart, potential doji candle at a leg D, but there should still be a leg D in the daily. It's going to be very interesting. 120-minute chart. Today's Technical Friday, Chapman Wave Technical Friday. You can see from the low of 2789.75 on the 17th. Or was that the 17th? Is there such a date? Yep, 17th. There was a rally. Remember, there was a Chapman Wave trend gauge flashing. Spirals up to 2816.50, pulls back, sneaks up to a peak C1, C2 in the Chapman Wave at 2280. Whoa, that was two. I'm good. One, two too many. I'm sure bulls would love to see 22,818 in the E-mini. No, it's 2818.25, peak C1, C2, double top. Chapman Wave arch formation with a plumb line, left side, right side price time match. Chapman Wave inside wedge, target, support line, pink right there, dashed line. It holds above the 2789s. It goes to 2793, round number low this morning. And we're now in a leg A. I'm calling it a gray A because it could fail. But in the meantime, back at the ranch, considering everything that's gone on, but geopolitically, politically, economically, whole bunch of things, pretty impressive, right? So let's go through the numbers and I'll tell you what we've been doing for subscribers, because this is our advertising hour. That's the only way you can get to know what we do and why we do it. This is the only way you can get a feel for whether this suits your particular style of understanding market technically, to a certain extent psychologically. And that's what I try to do. So I had a question. Yeah, hi, Basil. I wanted to let you know that I really appreciate the insight you provide in your radio show. As you know, from my multiple questions, I've been checking the price of gold and silver very closely. Yesterday, we experienced a bullish candle on both silver and gold. How do you discern if this is bullish, a bullish reversal, or merely a temporary bounce? Thanks for taking my question. Regards, Robert. So, what I'm going to do right now is I'm going to say to you, Robert, I'm going to go through everything, and then I'm coming to gold, because gold and the dollar right now, as I said to subscribers to my opening call this morning, dollar, gold, yields, and certain sectors are really on the cusp. This is really an important phase. Here we go. IND. The Dow right now was down very sharply, considering the news. It was overnight. Twice it plummeted to the minus 120 or more in the futures. I had a Chapman Wave trend gauge flashing on Thursday, which indicated that sometime there should be a 9 to 11 point upside reversal in the S&P futures, and that should help the S&P to rally. Doesn't say how much. It just says be careful, because if you're going short, rather wait for it to complete its move, and then you could do that. Well, it actually did that overnight. Look at this. Yes, what happened? Oh, this is a Dow 120-minute chart. Let me just quickly show you, because we want to speak to the point. And the point is that that particular technique, one of the techniques I've developed, many of the myriad techniques, worked very nicely. Look what happened. The E-mini was down at the 27.94.93 level, and then all of a sudden there was this big spike to the upside, And then it hit the 14 period, 14 period and 9 period moving averages resistance. And then there was news about tariffs again. Kaboom! It goes down to 27.93. Now we've had the follow through to the upside, which is the trend. My implication of the whole thing is that the trend is still to the upside, with the MACD very strong and the stochastic very strong. Let's now go back to the Dow and give you more of the nitty-gritties. Dow right now is up 25. There's this wedge that I drew for myself, just to show a rising wedge can often form a cup formation before it retests the high, and then you've got to go to other techniques to see whether it's going to break the high or not. So let's get out of 120s for now. No need to keep that going because we want the bigger picture for the moment. All right, you're out of that. Out of it. Here we go. Dow up 21. It has to get to 25,216 to start leg D. The support at the 9-period moving average of 24,979, let's call it 24,970s, really important. So far that's held. The MACD is strong, not as strong as it was when it went to that high on the 12th of June at 25,402, but still acting very well. Stochastics at 94%. You couldn't ask for anything better than that. Well, 96, 97, 98%. But this is really good action. That should give support to the market and allow it early next week to get to a D. All right, here we go. And the weekly chart has not gotten, so we are not, we took off that short position because it was stopped out for a little bit, tiny little bit of profit. We had a much bigger one. We did take a nice profit off earlier on, part of the half of the position. So I switched for subscribers. We switched to the long side. I don't want to tell you exactly what we did, but we are long in the Dow, and this is for short-term traders expecting leg D above 25,216. The resistance between 25,402 and 25,215 can be seen here. If you go to the Dow chart that I have with my automatically generated resistance and support levels, green's the resistance. That's the way it's colored. It's been like this for 12 years. I've never bothered to change it. And the light green, the cyan color, is for support. And it shows you 25,010 right now. It's a 10-minute, 120-minute chart support. Oh, I meant to switch that over. Why is that there? Oh, that should have been 10 minutes. Okay, let me change it right now. I don't want to get this all mixed up. We'll be running out of time. Oh, there are. Look at all the resistance above. 25,116, 25,131 in the 10-minute. The 120-minute chart shows 25,010 key support, just one level. But look at the many resistance. So if the Dow at any point today or Monday actually starts to get to the 25,170s for whatever reason, 150, 170, that's going to be really good. So a lot of resistance up there, 25,395 in the daily, anywhere from 25,165 to the 25,300 and mid 25,400s. All right, let's get back to our nitty gritties. I'll run this real quick. Here we go. SPX.X, S&P is up now, just modestly up 0.72, 2805.19, has made a peak D, high level consolidation. MACD is good, stochastics at 94%, really good. Leg D in the weekly looks like it might make a doji. We're going to be watching that. Monthly chart, like the Dow, is still very strong. The QQQ, this is where a lot of evidence-based analysis is going to be working for us next week. Made a peak D, high-level consolidation. MACD is turning down, but still good. Stochastic strong at 91%, but is turning down. Weekly chart, leg D, doji, watching closely. New all-time high this month, leg E extended, very good. IWM right now, Russell 2000, bumping into, funny how this, I'm going to talk about this in greater detail when we get back. I don't want to rush through this. This is Technical Friday, looking at Chapman Wave methodology. I want to show you a bunch of things going on here, but meantime, I'll just show you gold, nice bounce, up 5. It's just a bounce right now. It's attempting to make a bottom, but look at this, the DXY, the dollar index, down 52 cents, very sharp move down, but stuck in the range. It looks like a yield. Look, TNX, TNX.X. Look at this, also stuck in a range. This range is at the bottom. I'm going to show you something fascinating in a minute. Let me just draw this across before we go to the break. Hey, look at this chart. What does it say? It looks like this chart is trying to make an attempt at a bottom, but it's really like a rectangle formation, slightly lower lows, lower highs. It's really struggling, and it says that it's stuck in the rectangle, that it could rally to that big green candle, but it needs to break above that orange line, the 200-period moving average. Hey, wait a minute. This is the dollar upside down, the daily dollar. I love to do this. I always ask a question when I teach classes. I say, are you much better at going long or much better at going short? Some people are really good at picking shorts. Other people are just great at looking at longs. Some people can mix it up, but chart patterns, there's a visual aspect to chart patterns that people identify with. A lot of people identify with immediately. I'm looking at this and say, whoa, this is not even a cup shape formation. It's really still just attempting to go up. No, I think if you look at this, this is saying it's just the start in gold. So Robert, I'll answer your question when we get back, and we'll do a lot more technical analysis. Basil Chapman, Tiger Technicians Hour. First break coming up. I got it just in time. The Dow is up 21. S&P is just about unchanged. I'll be right back after these very important messages. Ping, 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 ping. Biggity-bubbity-bubbity-bubbity. I'll be right back. Basil Chapman, Dow's up 27. S&P's up $1.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So crude oil is down 15 cents, having made a peak C1, C2 double top a couple of weeks ago. Peak E in the weekly chart with a doji candle. That says that crude oil could continue to consolidate for a little while longer. It better hold 63. Yeah, better hold 60, well, 62.61 is the 200-period exponential moving average if it was to break the 66.10 to 65.90 support. Upside, I'd say 70.50, 71.35-ish, somewhere around there, strong resistance. Right now, I just think it's consolidating. Had a huge move, deserves a little bit of a break. Did the TLT just do it again? Then we're going to come back and we're going to talk. Oh, look at that. TLT is down 1.38, meaning yields have gone higher, but still within this trading range. It looks like a sine wave. Look at the rectangle formation in the, here we go. Look at the rectangle formation in the weekly chart. Has a resistance at about 122.50, has support in the shorter term at about 119.30 to 118.20, somewhere around there. Breaks that and they're going to go back and down and test 116. So I think that, yes, yields are kind of stuck in this range. Probably because of this, I have no choice now. If this is the way it's going to close, and I guess it's going to, I'm going to have to put in a down arrow right there to say that yields in the short term, the TLT in the short term is in a sell mode. It needs to get to 122.50 to negate that sell mode to say, oops, we can retest the highs. This is just a designation. It's not a prediction. Remember, I like to look at these things and just say what it is right now. And right now, decisively under the 200 period, let alone the 14 and 9 period moving averages, orange is at 121.56, and you're at 120.90. And the MACD's down, stochastic's down sharply, and the weekly chart is starting to show some signs of a little bit of wear, but it does say it should be stuck in the range. All right, maybe lower lows and lower highs in the yields. sorry, lower lows and lower highs in the TLT for the moment, making an arch formation. Key is really 120. That's the close below 120 says, yields could actually go quite a bit higher. Here we go. I want to look at this. I want to go back. So now we're going to look at gold. Gold is up 5.4. The candle that was formed yesterday in a trough G is very important in my work because this is the W formation that I'm always looking at in the MACD, because if it crosses back positive again, the green line, the 9-period differential closes above the slow-moving average, the 26-period moving average, the red one, that's going to suggest that 1242, the 9-period moving average is at 1236, but the 14 is at 1242. Could be hit. I'll be right back. We'll talk about it a little bit.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So what we're looking at is right there, is the gold contract. This is going to be really important. I'll explain why. Looking at my automatically generated Chapman wave, they're called Chapman wave projections of resistance levels and support levels, 1230 is the 10-minute chart strong resistance. The 120-minute chart goes to 1231.75 to 1232.81, and the trend is attempting to change. The 1210 low was taken out, but we're now very nicely above it. The monthly chart, let me go to the daily chart. The daily chart has 1228.10 as support. It took it out, and now it's back up. But what's really important about this, let me highlight it, is that look at the very few green candles we've had. All the way down, just red, 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 and little tiny little green candles mean nothing. There was one big candle. All the rest are big red ones, or small red ones. Now we've got a green candle. If by the end of the day, going into Sunday night, all the way through to Monday at this time, we can see gold moving between, it really can't just do a little bit. It has to climb above 1230. It has to be climbing above and then holding above 1236 to 1239, somewhere in that area, because 1242 is absolutely imperative. It needs to clear 1242 for the day to even start making a turn in that red line that you can see there, this downtrend line, to make it green once again. And you've seen that this is really a very important part of the work that I do. I don't actually refer to this chart very often at all because there are so many other candles, trend lines, points of importance that I look at it when I'm looking at the blank chart like this. I just see that. So I do keep there's the 9 period, it's pink because on the way down, pinky red, and black is the 9 period moving average. So 1236 is that level in the daily chart. And 1242 is the 14 period. You need to see a close above this for about 2 to 3 sessions out of an entire week. You can even give it out of 6 or 7 sessions. And that's number one. Number two is, if there is a reversal of significance in gold, Robert, it has to happen. Right, you want a V-shaped pattern. I don't want to see it chugging along the side like a rectangle, and then suddenly there's a pop to the upside. It's much more sustainable if it's a V-shaped pattern, and you start to immediately, over a period of bars, in this case days, make higher highs and higher lows. In other words, I like to see 3 bars up for a peak A, then a peak A that really barely gives back anything, and an immediate peak B with the MACD turning positive, going back above the 0% line. It's now -1. It needs to be plus, and probably +1 to really get going. And you want to see the stochastic, the unbalanced volumes, give it a nice V-shaped pattern, but it's done that before. This is the start. So for you, if you're looking at the SLV, I'm going to suggest, why don't you start a position here? This is a potential trough D. That's where things can turn around. So this is a risk-reward situation. At 14.58, I'd give it a small position so that I can give it something like a 14.20 stop. Maybe this one has no stop for 2 days. I usually use stops. At 14.20, 14.10, you can even go to $14 and say, hey, it's an initial position. Why? Because if the SLV at 14.58 up 16 cents is able to climb above 14.78, the 9-period moving average, then 14.85, the 14-period moving average, and by this time on Tuesday or Wednesday, we're looking at the dollar in the 93.20s and gold moving to that 42 level that I'm talking about, or 44, and you've got silver probably trading close to 15. I think then you finally got yourself a turn that says it is a turn for a rally, but it's not an intermediate term turn. I still think the dollar has more to go. It doesn't matter what the president says. Other things are really constitute the dollar's progress in terms of making higher highs and higher lows. This leg E to a peak E next week suggests, okay, 93.56, 92.80s, 92.50s even, for the dollar could consolidate. I would still only call it a consolidation, not a major turn. Hey, that's my thinking right now. Hope that helps you. Here we go. Next thing I want to do, because it's Technical Friday, high-grade copper should also be turning here. Yep, there's a little green candle. It's up 0.06. So if all the different commodities, let's look at the TRCCI. That's the Thomson Reuters equal weighted commodity index. Yep, there's a nice little gap to the upside. Yeah, maybe we start to see. Let's see what FCX is doing. Another commodity. Oh, not so great. It's trying to turn. Let's see what CX is doing. No, that's in a different area completely. It wasn't CX. Let's look at AG. Is it AGU? That's it. AGU is in fact AGU. That's an agricultural something or other. Nah, I can't remember it. So these are the clues. I'm suggesting, yes, there is the chance now that the dollar takes a little bit more of a breather, but it'll only happen if the dollar index really continues this big red candle. It's done it before. If there's an inside bar on Monday and it doesn't take out 94.40, instead it's trading at 94.95 to 95.32, that just says, whoa, be careful, gold is not ready. But if you want to start a position here, since you've watched us so closely, I'm with you. Caterpillar, question about Caterpillar. Yeah, 138.10 down to $1.32, not too great. I'm watching. If Caterpillar gets to 143, that's another 6 points higher, 6 points higher. That'll be really impressive. Let's see what happens. Next question is, AKS. So that's one that, of course, I always like to get for our subscribers. We missed it this time. Sorry about that. It's a low price stock at $4.91. It's up 9 cents. So the question is, what is the question? Basil, does either AKS or X look like a good entry point at current price? Have the best of days? Tim. So Tim, yes, I would do this. It's in a rectangle formation, but it's making slightly higher highs and higher lows. But MACD and stochastic are very good. This is very different to the gold chart we were looking at. So I'm going to say it's in a leg D, it's in a peak D actually, but I think that now it seems that, let me look at the SLX. I don't want to do things out of hand. This is the sector. Yeah, SLX is showing nothing yet. X, not a bad candle. Here's what I'm going to say. Tim, because you follow this so closely, I know that if I say to you, it's made a peak D, you know the implication. But if it's made a peak D and holding really well, it says, yes, you can take a small entry, start a position right here at 37.29 in X US steel, at 492 in the AKS, but it has to be a small position. Why? I would have no hesitation to start to add to it if it shows really good strength all next week, both of them. But if it gives back this gain by Tuesday and pulling back to under 4, it's a 491 AKS, AK steel, if it pulls back under 470, that's not good action at all. So I'm saying yes as a starter position. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, looks like we're going to make this the gold show because I got so many questions. Sean wants to know, looking to buy some calls and the GLD. Could I look at the GLD rather than the others? Yep, I'm looking at the GLD. Here's my issue. The month is nearly over, but it's not over. Not nearly over. It's got a week and a half or whatever. What I am looking at here is within the context of the markets, look, you've got a break of this key trend line support, but the month is not finished. This is going to be very important. Gold has already broken it. The arch formation took out the left side low, and it's got 2 bars to get back above 117.40 is at 116.45. This will be the first week. It's got 1 more week to go in the Chapman wave methodology. So that says this is the turn that better hold. You've not made a nice V-shaped turnaround yet in the GLD because it's up 64 cents at 116.45. Yes, it's a gray A starting a new turnaround in gray. I'm just going to make it real simple. If you were buying calls, I would probably go to the near month. I would not want to go out further unless I'm mixing them up. So I would prefer to be looking at, say, the 117.75, I don't know if they said, or whatever, 117.50 calls. If it's 120, that's too far out. You have to go with 115. If you got them strike prices on every point, then I would go a little bit out to the 117, just 55 cents higher. And I would say I'd go to, this is July, I'd go to August. And if I'm going to September, then I would prefer either to be quite a bit out the money, because if gold takes off, really takes off, it should get to 120 very quickly. So I'd be looking at the September out of the money, 19 or 20s, but I would prefer to actually play it almost 1-to-1 and get an in the money September, or maybe even mix. You can have 3 positions. One is in the money September, one is way out the money, and the other is very short term. I'd be playing the 117s or the 160s, 117s. That's what I would do. I actually wouldn't even give it room. If it takes out today's low one more time, yesterday's low, I'm done. You could hold those positions, but I think it's going to be much more difficult. Why? Because it could bounce and then go into a sideways range rather than rallying. It doesn't even have to break down. It could just go, instead of straight down, now it could go sideways. All right, I hope that helps you, Tim. So yes, but be very strategic in your thinking. Think premium immediately. As you do it, think premium, because at this point, another pullback would really shrink that premium. People will just give up on those calls. They'd be looking at the put side. Then I would be looking, if it goes under 115, I'd be looking at near-term August for sure, because it should be, at this point, it should be like a trampoline, so oversold that it's getting to the point where it just, like a coil, it swings back. I hope that answers your question. So the next thing we want to look at here is, where was it? Oh, Microsoft. Good question. What is the question? I remember reading it earlier. Microsoft, new high. That's cloud. Yep. Google, Amazon, CRM, Oracle, SAP, Baba. Oh, the counts. Okay, let me show you. So not MSF. What is MSF? Morgan Stanley Emerging Market. Oh, like instead of the EM, I must remember that. Right, this is a lower priced, and it does the same thing. MSF. That was a mistake. You know, serendipity in this business can be really beneficial sometimes. MSFT all-time high, trading up 2.23 at 106.64. It's given back a huge amount of the gain. It had 108.20 a high. This is going to be very interesting because you remember I was speaking to Tom, I was interviewed yesterday by him. I said, peak C in Microsoft, I believe it should go to a leg D, just like the Dow should go to its D, just as Cintas should go to its D. Leg D spikes over 108 right now. It's at 106.70, giving back a huge amount of the gain. I think there's still a little more to the upside. Watch it closely. Next thing I'm looking at is CTAS, Cintas. Whoa, very nice, up 8.17 at 201.85. Made a peak C. I said it was a Chapman wave falling axe formation. Earnings were out. Fabulous earnings, I guess. Leg D in the daily, leg D in the weekly, and leg E in the monthly. Says in the rotational corrections, the earnings here was fabulous. But this is earnings related. It's in 2 weeks' time that I'm looking. And if Cintas, wow, that's a lot of points to give back. 8 points, 10 actually. Let's just say that if Cintas in 2 weeks, the end of the first week of August, if Cintas is trading closer to 190 than 210, I think then we'll be in that whole correction phase. We'll see. I don't know. That was that. I think I've got all the questions. No, I missed one, and that was Boeing. Yep, I forgot about Boeing. Boeing right now is up 74 cents to 356.07. Made a peak C. I think there's a chance that by next week it goes to a D. Right under the 374.48 high of all-time high of the 7th of July. Then we'll see. Does it start the pullback? My thinking is that it does the pullback. Doesn't even have to get to the C because it's the MACD is good. Stochastic's very good at 90%, but it doesn't have to. Under the previous peak, it can fail beforehand. I think it actually will try to do that. We'll see what happens. That was, and then UTX. What was the so Boeing UTXG? Okay. UTX trading right now up 31 cents, 130.67, has got a peak C, but it's way under the previous highs. I think it's going to try for a D next week. I'm not sure about that. We're still long. We've got a small position remaining from our long position back in the 119 area. It's at 132.64. I'm just suggesting here that this is part of the clues that I'm looking for. The weekly suggests there's a chance for a right shoulder failure, but not a breakdown. Just a retest of the 127 to 123 area, 127 to 125s. No big deal, but I'm going to be watching this closely, even though we are long. Question in the den, what area in the Dow Jones will major top form? 30K? I have projections. I've got a feeling that if what I'm looking at here for the mega bull market coda phase to really kick in, we want, look at the FXI. This is FXI's China. I want to see China participate in this next bull phase. Look, same as gold, having a big pop to the upside, not a big, but a pop to the upside, 81 cents at 42.22. If the FXI next week is able to trade in the 43.60 to 44.10 area, I'd say that, yep, it's turned around and maybe the commodities will also be moving higher. If it breaks down and goes under 41 at any time in the next week, not good action at all. But I have, I do have projections, and I got a feeling that it's a projection that once everything kicks in, when it kicks in, I'll have no choice but to upgrade each one of those projections. And we might even be getting projections on a 3-week basis. But that's a whole nother story. We've got to get out of this morass, this rotational correction. And before we do that, I think there's a chance to drop down to the 24,000 or into the 23,000s in the Dow. We'll be watching that one closely. Stay tuned with Steve Rhodes. I believe it's a program he did this morning. It's been it was pre-recorded. So, and then of course you've got Dave White and Tom Bryan. Have a great week. Please check out my opening call, my newsletter called The Opening Call. front page of TFN. Hopefully you'll find it very beneficial. We're expecting leg D in the down next
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, I'm back. Who knew that I was just counting, there's 7 clocks in front of me. Actually, yeah, 7 clocks. I just wasn't looking at the clock. Okay, so the FXI is going to be kind of a clue. Some real great questions came in just as I was about to go off. XLF, I forgot to look at the XLF. Look, it had a lousy day yesterday, but it's had a very good couple of weeks. 2661 was along the 28th of June. That's the S&P Select Financial Spider Fund. Rallies to just under 28, drops to about 2740. At 2761 right now, made a peak C. I'm watching this really closely. Why? Because the weekly chart is not great at all. It's struggled. Monthly chart is sitting on the 9-period moving average. Nope, sitting on the 14-period black line moving average. And for weeks, it's been testing it and hasn't broken below it or closed below it, or even just other than touched it and then bounced. This is going to be really important, because if you've got a Goldman Sachs, which right now is up $1.98, also had made a peak C, looks in fact very much like the XLF, is going to come strong as a leader. It needs to get from the 230s right now, it has to be in the 245, 247 area. And then I'm going to say, whoa, I think there's leadership here. Up until then, chop, chop, chop. The next thing is Bank of America. I don't even want to look. Bank of America up at 30.03, up 36 cents. We had it under 28, I think it was. Under 20, what did I have it at? Under 29. Under 29, and now it's at 30. And no big deal. I should have popped in today, but I'm not sure it has broken that long-term trend line in the 120, in the weekly chart, and it's going to close above that line, which is around about 29.55. So this is a start. Once again, the monthly chart holding very well under the 9-period moving average last week, over it this week, and holding the 14-period. So yes, good question about the XLF and Goldman Sachs, etc. I'm going to do a lot of work over the weekend. Why? Because I want to see whether the banks can actually lead and push much higher for the rest of the summer. This is a very important moment. And then we'll talk about yields, dollar over the weekend. I'll start sending charts out tomorrow. As always, this is an important period because we've had the rotation. Suddenly the IWM came on a little bit stronger this week than the other. We'll be back on Monday. I am taking a break right now. Stay tuned for the great programming.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.